All right, so I didn't expect to be back so soon doing another video, but there was a Reuters article after the bell that talked about EPIC Crude Pipeline that they're exploring a sale. So I'll just summarize the article really quick and give a few notes. And then I think it's a good opportunity to do kind of a deep dive on Epic and just show what the tool can do for potential clients. When an article like this comes across, this is kind of what I do is I dive into the tool and learn more about the pipeline, and hopefully the tool makes that easier than sifting through a million data sources and trying to piece things together. So the article came out this afternoon, basically said Epic, controlled by investment firm Ares Management, owns about 40% of the company, and the rest is owned by Kinetic and Diamondback Energy. The owners are working with investment bankers on the sale and have begun sounding out potential buyers. Four people familiar with the matter said. Pipeline company with existing Permian oil assets is the likely buyer. Not a huge surprise there. Said some of the sources. All of the sources cautioned that a deal was not guaranteed and spoke on a condition of anonymity and privacy. Both the chief executive. So the article goes on to talk about how Diamondback and Kinetic hinted during their Q2 conference calls that they would be open to selling their stakes in Epic. Based on the transcript, Diamondback seemed more aggressive with that. Basically said the for sale sign's out. Kinetic was mostly hey, we'll sell it if we get a good price, so a price that we want. Potential for everyone to sell their stakes for sure. And it seemed like Diamondback and potentially Ares are the most open to it. Any deals expected to value Epic at between 2.5 and 3.5 billion. I think that makes a lot of sense. I looked at the 2024 EBITDA. It was about 290 million for this pipeline, which puts that 2.5 to 3.5 billion midpoint at 3 million at about a 10 times multiple. That seems about right for me. And we'll talk about some of the reasons that is. I think they have low recontracting risk, so we'll talk about that. One of the sources noted that to achieve the top end of the valuation range, Epic would need to strike contracts with oil producers that would allow it to greenlight its expansion. So this is important, and we'll talk about this during this video. That the future expansion capacity is probably a big deal for this deal, and the amount this pipeline gets sold for and who buys this pipeline is going to be who values that expansion capacity the most. So we'll dive into who might value that expansion capacity the most based on terminals they already own or pipelines that they can use to get operational efficiencies out of this. I personally think talking in the near term that getting commitments for an expansion is probably pretty unlikely. I think that there's 600 to 800,000 barrels a day of open capacity from the Permian to the Gulf Coast today, or in the future in the next couple months when Enterprise brings their system back online. And there's people aggressively bidding short-term volumes at rates pretty low. So certainly possible if we were to see an uptick in oil prices and we start to fill some of that capacity. But in the short term, I don't think that Epic's going to be able to do a deal on expansion capacity unless they go really low on rates. Certainly, if you go low on rates, you could get that termed out, I think. But they may not be able to do that. They may not want to do that. They may want to wait. They may have contract structures that don't allow them to do that because of a most favored nations clause. So saying that, let's dive in and look at this pipeline. So again, I think we'll do a quick overview, and this is going to be like what I do when a news article like this comes out to get up to speed on a pipeline, and it doesn't take more than 10 to 15 minutes typically to dive into this. And then we'll talk about who might be best situated to buy this pipeline. So stick with me for the next 15 to 20 minutes. We'll get through this and you'll know a lot about EPIC Pipeline. And always, I'll put a summary article at the bottom. So green dots are receipt points. Red dots are delivery points. Sometimes you'll see orange or yellow dots. Those are going to be mixed points where they can receive and deliver at those points. So 4 receipt points in the Permian, so pretty straightforward. We'll click on the first one. This is Orla. And they're getting volumes from EPIC. They're probably marketing volumes on their own pipeline. and also Salt Creek. So Salt Creek Midstream has a gathering system that appears feeds into the Orla Point, and only 30,000 barrels a day roughly from this. And we should back up. Let's look at the actual flows on the pipeline. So just the egress point here. This pipeline has a capacity. I have the capacity to about 625, and it is running full today. We should talk about the contract structure. So before I dive into these points, actually, this was originally brought online in early 2020. They did interim service on a Y-grade pipeline before that, but this came online in 2020. The original contract structure was 5 and 10-year terms, and a mix of acreage dedications and minimum volume commitments. They did do a deal last year with Diamondback and Kinetic, where both of those parties bought more of the pipeline, and they did that in exchange for terming out more capacity and extending their capacity on the pipeline from 2025 to 2035. So again, the original contract structure would have some of those contracts rolling off in 2025, and we probably would have already seen them. I haven't seen a downtick in either volumes, and we only have 1Q revenue, but 1Q revenue, there was no downtick. So I think the deal they did with Diamondback and Kinetic, where they gave them what appears to me, based on disclosures in their SEC filings, gave them a really discounted price on the pipe. They did that in exchange for the 10-year agreements on the pipeline to extend those terms at the rates that they were paying. So we'll get into that quickly here, but I will just say that based on what I see on the contract structure and what I see from the tariff filings and the disclosures of the new agreements, I think anything that they had expiring in 2025 was probably termed out till 2035 with the Kinetic and Diamondback renegotiation or extensions. And then the original contract had some 10-year agreements as well. So those would be 2030. So to sum up my long-winded talk there, I think that this pipeline's probably pretty close to fully contracted through 2030. At which point those original 10-year agreements would run out, and then there's some more agreements that run out in 2035. So 2030 and 2035, probably your big chunks of contracts rolling off. So probably in pretty good shape there. If we look at the actual rates, I think it's important to look at this really quick. So we'll see transactions that are tariffs out, committed. Let's just do Ingleside. They're all the same. So really easy contract structure. All the committed shippers appear to pay the same rate. And this around $1.50, a little over $1.50. I would say that's a little bit higher than what I would guess the market's at right now. But to be completely honest, we don't have a good data point of where the market's at for long-term Permian egress capacity. I did a video a month or so ago on Cactus 2's new rates, but those appear, based on the data I've looked at, to be part of the original agreement. So there was a step down to about 90 cents on the rates on Cactus 2 for the anchor shipper, but that appears to be a discount that they got as part of the original contract signed up in 2019 or whenever it was. That was part of the original contract. So I don't know where rates are. I would say this is probably a little bit higher than where I guess it would be, but it's a good thing they did the deal. It doesn't appear to me that they have a lot of capacity rolling off in the next few years. That's my guess based on the analysis that I've done. So rates are probably a little high, but you don't have to worry about it until 2030. Okay, let's dive into more of these points. I showed Orla prematurely. We'll look at Wink, and we'll look at transactions here. You'll see Chevron's Delaware Crossing Pipeline feeds in here. Gibson has a terminal at Wink that is feeding this. And MPLX's Jackrabbit terminal at Wink is feeding this, it appears, as well. And then the overall amounts, I'll just go back here, 150,000 barrels a day. So 30,000 from Orla, 150 from Wink. Let's look at Midland quick. I'll zoom in here and just note that the dotted line here denotes lease capacity. So they lease capacity from ONEOK's Medallion gathering system. So they're able to pull from Midland based on that lease. And they have Plains Oryx is a counterparty, and then Energy Transfer's ETS. That's a JV that they have with Sunoco LP. And these are likely New Star's Permian system is what's feeding this. So that's part of the ETS JV now. So about 200,000 barrels a day, a little bit less now. And then Crane. So pretty dominated by ONEOK here. So ONEOK's medallion system we talked about. They've gathering system feeds into Crane. And also they have Magellan assets that ONEOK acquired. So former Magellan assets. Magellan has a big presence in Crane. That's where their Longhorn pipeline originates. So, and about 300,000 barrels a day there. So 300,000 barrels a day at Crane. Let's call it almost 200 at Midland, 150-ish here, 100-ish here, 150, and then 30,000 here at Orla. Add it all up, you get the flows on the egress pipeline, 630,000 barrels a day, roughly. I won't spend a lot of time on these, but they also have Eagleford receipt points. So these are in the Gardendale area. They're small amounts. I won't even click on them, but you can I'll click on them just so you can see the small amounts here. Picks up some Eagleford volumes, here from a couple players. Looks like Plains and EPIC's doing some marketing, it looks like as well. So again, I can click on the point here to see the flows. It's going to look about the same since they're not picking up very much volume here, just a little bit of volume. Let's focus on the delivery points. This is the Robstown terminal. This looks like it's mostly used for operational storage, so we'll ignore that. It's really not worth clicking on. They do make some deliveries into Taft or Midway. It's not a lot, but there is some there. But really, the focus should be what's going into Corpus and what's going into Ingleside. So if we click on Corpus, you can see looks like they feed a little bit to Valero, some to Pinoak. Pinoak has an export dock in the inner harbor there. EPIC is feeding their own dock, so they have an export dock as well. And then Citgo has a refinery in the inner harbor. So those are the counterparties on the delivery end of the inner harbor piece. If we switch over to, and I'll just click on the flow point here. Remember, we have about 630,000 barrels a day flowing in, and then about 250,000 of that's going to Corpus. If we click on Ingleside here, we can see the counterparties, Gibson, a little bit of Flint Hills, looks like not much these days, and then some at Enbridge as well, going to those terminals. So click on this flow point just so you can get an idea of what flows into Ingleside. So again, 630 flowing in, you have almost 250 going to Corpus, about 400,000 going to Ingleside. Now, this is an important point to note here is this is a 30-inch pipeline all the way to Corpus. However, the pipe that goes up to Ingleside is only a 20-inch pipeline. So if somebody's wanting to buy this and wants to buy this to expand capacity into Ingleside, which I think a lot of the market probably rightly views as advantaged versus the inner harbor, just because its location's closer to the sea. That's where most of the barrels want to go, it seems. You would maybe need to expand this pipeline. I don't even know if it's expandable. A 20-inch pipeline's already pushing 400,000 barrels a day. I don't know many 20-inch pipelines that do more than that. So it may not be expandable. So at that point, you're deciding, hey, do we want to just ship out of the inner harbor? Do we want to do a deal with somebody to do a joint tariff to be able to get the barrels here? But that increases the cost to you. So we'll talk about who might be advantaged going to Ingleside here in a minute when we talk about who might actually buy this pipeline. So I think that's a good overview of the pipe, and we can dive into like who would maybe be a good buyer of the pipeline. And I haven't done anything. I have a few cool things to show, but I haven't done any super in-depth research on who I think is definitely going to buy it. I think a lot of these guys you could make an argument for it makes sense to them, and we'll just go over the reasons why I think, and we'll do just an overview of what their systems look like on top of these, what systems they have that are maybe underutilized that could make it worth it for them to use the EPIC capacity and then potential expanded capacity down the road. So we'll dive into that here right now. So let's first look at Plains. Certainly a company that's open to doing acquisitions, done a lot of bolt-on acquisitions lately. So I'm just going to bring up their they're long haul pipelines. So these are the long haul pipelines, and I'll toggle them on and off. So that's EPIC here. This is this overviewed with Plains. And then quickly I'll just toggle on their gathering system, their Plains Oryx gathering system. So certainly a huge system up in the Permian. So certainly be some supply integration into all of these points. Plains is absolutely able to do that very easily. We'll focus on one pipeline here because I think it probably makes the most sense from a potential operational synergy point. Would be their Eagleford JV pipeline. So this is a JV, 50% JV between Plains and Enterprise. So they each own 50% of this, and this does have some spare capacity on it. So if you look at what's coming out of Gardendale, there's a little bit over, let's call it a little bit over 100,000 barrels a day of spare capacity there that they could use. Coming down into Corpus, the similar amount, 150,000 barrels a day of excess capacity that they could use. And this system feeds into their terminal in Corpus Christi. So they're able to export out of that terminal through this pipeline. So you get some integration there. Would this make sense? It would potentially make sense. Again, Plains is a company that's open to doing acquisitions. I will say that they're typically, the acquisitions they've done recently, I would say are pretty conservative in that it's a good thing. I think that they haven't overpaid. So in a potential bidding environment where this pipeline is being bid out, they may not be the highest bidder, but they do have some potential operational synergies with Eagleford JV. So the operational synergies would be, instead of expanding this entire pipeline, EPIC, I'll take off Eagleford JV for a minute, instead of expanding the entire pipeline all the way down to Corpus, maybe you can do a small expansion and expand into Gardendale. And then you use your open capacity on your Eagleford JV pipeline that is basically free at this point to get the barrel down to Corpus. Of course, there's some operational variable costs, but you could probably make some decent money doing that. So that's what I mean by operational synergies, and we'll look at a few more of those. So next up, keeping on the Eagleford JV point, we'll talk about Enterprise. So Enterprise can do this same thing. If they and Plains wanted to group together and do this, it's certainly something they could do, is push the barrel down to Corpus. But Enterprise can actually do something else that's pretty interesting. So I will just toggle them on quickly. So I'm going to toggle on and off their South Texas system. So this is a system that runs from the Eagleford over here all the way to Houston. So as I think a lot of you know, Enterprise has a lot of assets in the Houston area and the Houston Ship Channel, a lot of oil terminals, big export docks. That's where they typically want their barrel to go. So they could utilize this line, which, let's see, has tons of capacity on it that's open and would be very economic to use to move those barrels. So something like doing an expansion in the future in a few years on EPIC, and then feeding it into your Eagleford JV assets, feeding it up into your South Texas system and getting into Houston. That's certainly something that Enterprise might be open to, and certainly may make them a bidder on the project. I think that they'd be a more aggressive bidder, depending on what their offshore terminal looks like. But it seems like they've had trouble getting that one contracted out. So that might not be a project that happens. But still, I think there's some operational synergies here that would make sense for Enterprise to be interested in this as well. Let's clear all this out. We'll reset with EPIC. Let's take a look at Enbridge really quick. So Enbridge is certainly a company that has made some headway in getting into the Permian. So I'll toggle on their Gray Oak pipeline. So they've been buying pieces of Gray Oak for over the last 5 years or so, and utilize this to feed some of their downstream assets, notably this Ingleside terminal here. So this is fed by their Gray Oak pipeline. It's fed by EPIC. But this terminal here is the biggest export terminal in the U.S. by far, I believe. And this is really midstream 101 from Enbridge. So they're very good, and they do this exceptionally well up in Canada. of controlling the barrel all the way kind of from the wellhead all the way to the export dock or all the way to the refinery. So all the way to demand. So that's a strategy that they seem to be implementing in the Permian pretty well too over the last few years. So the buying of Gray Oak, which I'll toggle on here again, and they own what's almost 70% of Gray Oak. They own 30% of Cactus 2. So it's a non-operated joint venture they have with Plains. So certainly this is something that they've been somewhat aggressive with, and during their calls they've talked the last few calls about expanding Ingleside, that terminal, even more. So I think they would be very open to that. Now there's some other advantages that they have. I just named one of them. If they can feed this Ingleside terminal, they make money off this Ingleside terminal too. So imagine a couple years from now when capacity potentially gets tight out of the Permian, they can do an expansion. They can potentially feed this Ingleside terminal. Now, can they get the barrel all the way to Ingleside? This is where they might have an advantage over others as well. So they have a pipeline called the Viola pipeline. And I'll toggle it on and off again. So this is a pipeline that's moving barrels from Corpus Christi to Ingleside. Now this used to move barrels from the Eagle Ford JV pipeline that was feeding it, but I'll put on the flows here. As you can see, over the past year, they haven't been running anything through this pipeline. So this isn't missing data. These are actual zeros. So this pipeline has 300,000 barrels a day of capacity. This is something that's really important to note here is anybody who wants to feed Ingleside is going to have to figure out a way to do it with an expansion of EPIC's pipeline. These guys have a pipeline that can potentially do it, because this pipeline all the way to Corpus can be is 30 inches. They could just feed Viola and get more barrels to Ingleside. So this is, again, classic midstream 101. You're using underutilized assets to give yourself an advantage and make things more economic in your bidding on assets or building of assets. So certainly I think Enbridge is a big player. I would note that their Ingleside terminal is huge. I will show that here quick. Let's toggle off EPIC. Bring Enbridge back. If we just look at the Ingleside terminal, we can actually see from the disclosures what this actually flows out. So as you can see, they're moving over 1.2 million barrels, sometimes over 1.3 million barrels a day of crude across their docks. And they have said that they want to expand with more docks, and they have lots of land there that they can expand with more storage and terminal capacity. So they are definitely going to be a player, I think, in this, and definitely going to be interested in this based on some of the operational synergies that they can get out of this. So keep an eye on Enbridge. ONEOK is probably a good one to mention. You may have remembered, and I'll bring up EPIC again really quick just to show you that in Crane, ONEOK is one of the major contributors of barrels. So potentially some upstream synergies there. Downstream synergies, let's just layer on ONEOK's assets. So I mentioned that EPIC already has the lease with Medallion, which ONEOK owns. So if we layer on the assets, you can see that gathering system. You can see Longhorn Pipeline. You can see BridgeTex Pipeline. So their long-haul pipelines go to Houston. Their operational synergies are probably going to be best in Houston, as they have this big distribution system in Houston where they can distribute these barrels across the area. So from a standpoint of upstream, I think it makes some sense. From the standpoint of downstream, maybe not so much unless they want to diversify to Corpus for some reason. They do have a 50% interest in an Eagle Ford pipeline called Double Eagle, so I'll toggle that on really quick. This is a 50-50 JV with Kinder Morgan. It doesn't have a lot of capacity on it though, so we're talking like 100,000 barrels a day. But they could do something similar to what I said the Eagle Ford JV could do, where you only expand the capacity to Gardendale, and then you have your excess space on your unused pipeline or underutilized pipeline to take those barrels to Corpus Christi. So I think ONEOK will be a player too. Listen, they bought a lot of stuff recently. I don't know if they've said if they're open to buying other stuff, but there could be some operational synergies that make sense here. They want to diversify. If they want to diversify to Corpus, they could certainly do that. They have a terminal at Corpus. I think it moves a variety of products, not just oil. They have a splitter at Corpus through that. I don't think that they would send any Permian barrels through the splitter, but just noting they do have infrastructure at Corpus that they could utilize. I won't spend a lot of time on, let me just clear this out. I won't spend a lot of time on Exxon. I'll just overview their lines quick. I don't think that they're going to be a player here. Certainly there's some receipt points that touch, but I think that they're mostly, this is their Wink to Webster pipeline, by the way. I think they're mostly focused on wellhead to their refineries. So one of the major things that Wink to Webster does is get the barrels to the Exxon refineries. So I don't think that they're going to be a player here, I guess is the short way to put that. Energy Transfer, also one that is always open for acquisitions, and I think they've done a pretty good job recently over the last, let's call it 6 years of not overpaying and doing pretty good acquisitions. Obviously, they have a massive footprint and a massive system. Most of their barrels are also going to Nederland, so that's kind of where their infrastructure is. They do have kind of a weird spare asset down here. It's an old Eagleford pipeline that moves some barrels. But this doesn't make a ton of sense for them, unless they want to diversify to Corpus Christi. But really, I don't see a ton of operational synergies here. I don't think it makes sense for them to really be a bidder here. One that I think is really interesting is Gibson. So Gibson doesn't have long-haul pipelines yet, but they did purchase this terminal next door to, so you guys know, this is Moda or Enbridge's terminal. Enbridge's Energy Center is what Ingleside Energy Center here. This is Flint Hills' terminal. And then this is South Texas Gateway, which Gibson bought a few years ago. So they do have a pretty large export terminal here. So that would be something that maybe attract them. And as I said earlier, at Wink, they're one of the, they have a terminal at Wink, and they have a small gathering system up there too. So kind of a long shot, given that they don't have long-haul pipelines already, but certainly one where they could take a shot at this and use this to feed their terminal downstream, and then have their upstream stuff feed this pipeline. It already feeds this pipeline already, but potentially expand that in the future. So they could be a player too, potentially. I do think that they're kind of a longer shot, but they certainly have some assets that would make sense there. All right. I'm under 30 minutes. I thought that was pretty good. So I think this is a good overview of like how I would expect our clients to use this and their analysts use this when you're looking at newsworthy items like this. So, or when you're analyzing really anything. Hopefully you see the value in having the data visualized and organized in a way that makes it easy for you to like understand what's happening on the pipeline, understand who might be a buyer on this pipeline, or whatever's going on or whatever you're trying to analyze. Hopefully this makes some sense and is a good overview of the value that I see in the tool. As always, housekeeping items. I said it in the earlier video, but in case somebody didn't watch, I'll be in Houston next month and the month after. If you want to see me, I'd be happy to come in, talk to you, show you the tool, tell you what we're trying to do longer term. Yeah, and there'll be a summary article on this at the end below the video. So hopefully everybody has a great week. Again, I'll be back talking about another Guernsey pipeline later this week, probably into the weekend. So have a great week. Yeah, thanks for watching.